Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. It's a Trump-driven market, so it'll be a Trump-driven show. That'll be kind of the theme of today's show as we sort of break down the Friday evening action and this action this morning, sort of based on with the headlines we got over the weekend out of Washington and from Trump's Twitter. So we'll talk about that and sort of how that relates to things going forward. I think Joel and Dennis are on opposite, but at the same time, similar sides of the argument here. So we'll break down that. We have some movers as well. Teva getting crushed this morning on a lawsuit that was filed. So we'll talk about the biggest movers of the morning. We'll probably break down the Uber IPO a little bit from Friday and what that means going forward. And our guest today, first time in a while, we're going to be joined by the Reverend Emmanuel Lemelson from Lemelson Capital Management, the Lantern Foundation. He will join us at 8:35. But in the meantime, Joel, what's the word here in the S&Ps?
Right on the screen here, down 42 and a quarter handles at 28.45. Lower open, got to pop up to 28.69 and a quarter. That's going to be my level for the week here, folks. We get above that, regardless of the Trump tweets, regardless of what happens, I will have a bullish cap on. Below that, I am definitely bearish. Last week's low, 28.26, made that on Friday, but had a nice rebound. That's your major support. Crude trading up 68 cents at 62.34. Big area, 62.50. We've had several highs in that area, so look for that for a potential breakout. Silver and gold both in the red. Gold down 380 at 1283.60. Silver in the red by 16.5 cents at 1462.5. And the new flight to quality, Bitcoin trading up nearly $1,000, $920 at 7,275. The new flight to quality. You can say you heard it here.
Flight to quality. That's a good one.
Benzinga's Pre-Market
like
Prep
that.
Show. How you doing, Dennis?
That's funny.
And Bitcoin's hot. I mean, we've actually been, we haven't been on the bear train here for a while. I mean, technically, this is just going. So, like I said before, I said it for the last couple of weeks. If I was a Bitcoin trader, I would not want to be short. But I'm not a Bitcoin trader. I'm a market trader, and the market's going the exact opposite direction. So, call flight to quality, call whatever you want. It's always interesting to me, though, that these moves happen over the weekend in Bitcoin.
Oh, yeah.
And do you know why I find that interesting?
Less liquidity.
Yeah. I think and not saying it's all manipulated, but we know markets are manipulated, and an unregulated market is going to be manipulated much more. If you are really trying to push price, you're going to push it when all the liquidity is at its lowest point. And that's probably over the weekend when traders are with their family, traders are doing things. And I always find it interesting, you coming over the weekend, that's when it has its biggest moves. So I think, there could be a lot of shenanigans a lot of times in these crypto markets as well. But, fundamentals, you can't analyze it that way anyways. But just saying from a technical basis here, just talking just pure technicals, you can't really argue with the way it's been moving. I mean, really, we formed the big base down there from 3,000 to 4,000. And we broke out, and we haven't really looked back since. And then we consolidated around 5,000 for the better part of a month, and we broke out again here. So technically, it's trading well, and it's really hard to trade anything off on anything else. So if all you got is the technicals still look pretty darn good.
And just kind of with the market too. I mean, look at, there's less liquidity in the S&Ps in the Sunday night session. And, you could construe whatever news came out, and it's been construed negative, right, as of this morning. So, that was kind of a prelude to a little bit of a discussion. I mean, to me, the macro situation, I mean, you cannot, you can't base anything on what's going on in the macro. We have a trade war and also a possible war with Iran. That just comes after, you had some good fundamentals with earnings season here. And it's created volatility in the market. I mean, everyone likes, volatility, but when it comes really volatile markets, I think you have to rely on your technicals. And I'm just looking at the market down this morning. I have an area, no matter what happens, no matter what Trump says, if there's a pop to a certain area, I like to initiate your shorts. If I'm wrong, starts blasting all the way through there, then it's a losing trade. And, I cover it. On the other hand, if we get down near the lows from last week at 28.26, I think you find support there for the first time, and that's really the only way. But between those levels, between 28.26 and 28.70, you're flipping a coin. I have absolutely no idea what can happen down 41.50.
I will just say this is one of the toughest trading environments that you're going to get. And the reason for that isn't the volatility. The reason is the unpredictability. We don't know what the next tweet is going to be. We don't know, how, the discussions. Yes, Trump is trying to keep us, obviously in the loop by tweeting again and again and again. But every single tweet can cause the market to go up, 200 Dow points, down 200 Dow points. And that unpredictability makes it very difficult to just take a trade on a technical setup. I always say technicals work very well in the absence of news. You can use technicals once the news is out to go to the next level, which I think you're talking about, Joel. If you have a down move, you come and look at your technicals and say, okay, well, where can we go down to? So technicals are still useful, but as a predictive tool of where the next move is going to go, it's difficult when you have a Trump tweet, because you can have the best chart in the world on Friday looking like a breakout, and all of a sudden, obviously it sounds like trade negotiations are not going well, and over the weekend from all these Trump tweets, and the market's down 400 points. So, this is the market that we're in right now. We're in a Trump-driven market, a trade war-driven market, and everything is dependent on what the next tweet is going to be. So I would say intraday trading, as long as you don't get a tweet intraday, you can use your technicals and you can use your little setups. But overnight trading gets tricky. Swing trading gets very tricky because we don't know where the next tweet is going to be. So there's still setups though, and this is why I do like trading market neutral. And I don't I talk about my strategy sometimes. Obviously, I talk about technicals. We talk about lots of different things on the show. I primarily trade market neutral to eliminate the market risk. And if I was just long a whole bunch of stuff over the weekend, I'd be getting killed here this morning. In my long-term investment portfolio, it is getting killed because my long-term investment retirement account is long only, and we're getting rocked here again. Right now, we're getting rocked here again with something said.
We'll just go to a tweet. Let's just go to our Twitter feed. What do you got?
We're just file another
he hasn't tweeted
handles right now.
He hasn't tweeted for about 40 minutes, so
I can't keep up.
It's not from him just now, at least. He did tweet.
Something happened.
He did tweet it earlier this morning. If we're gonna go back to his Twitter for a second, because I was confused. Who is the arbiter? Who decides which of his tweets the market's going to react to and which of his tweets they're not going to react to? So yeah, I get we were already down this morning, but at 6:50 he had a bit of a chain, like a 2 or 3 tweet chain about China, how they had a deal, but then they backed out, and the market didn't even move on that. I was watching the futures as that tweet came up and not moving. So yeah, we were already down. So but I guess I'm just so confused as to which tweets the market chooses to react to and which tweets it chooses to ignore.
I think if you read between the lines, when you get 50 Trump tweets over the weekend, you can kind of read between the lines and say, hey, negotiations aren't going well. Most of these tweets were negative. Just because he comes out with another negative tweet, the market already gets it. Okay, you come out and say, yeah, okay, we're going to tariff, we're putting the tariffs on today. There was enough tweets over the weekend here that we get it. The deal is not close to being had, at least not right now. And that's why the market is down significantly. So the next Trump tweet here, if he says something negative, really is going to impact the market. We're not going to drop another 200 Dow points because he says something negative about the deal. It's all perceived as being negative right now. If he comes out and says, hey, I just had a good conversation with China, that's a completely different story. That's what we were rallied 200 points on. So right now we're actually, in full on, I think the market is saying, look, doesn't sound like a deal's happening anytime soon. I'm selling the hell out of it. That's the mode that the market is in this morning. That could all change, though, on one tweet that he says, hey, negotiations are starting to go better. So I don't think it's a case where you just get one more negative tweet that we're going to drop another 200 points. I think it's a case that this market is now pricing in a long stand and not an imminent deal. And that's what the market does not like right now.
Okay, there was a headline at 8:08, China to raise tariffs on some U.S. goods from starting June 1st. I don't have confirmation of that. Yeah, and that's it. So it's just, you know what?
So we're back in trade war land.
That's the headline right now.
We're back in
China's in full war now. So China's coming back. That's your headline that just knocked the market down.
Yep.
We're back
China
in
says to raise tariffs on some U.S. goods June 1st. So they're like, okay, Trump, we'll match it. Now we're going to raise tariffs back at you. So this sounds like full-on trade war. Market doesn't like this.
Full-on trade war. And you know what? And I don't want to give the Chinese any additions for their playbook, but you know what? They're just going to string this out to the election. Why not? Until November of 2020, because the closer it gets to new 2020, the closer things start ramping up for the election, there's going to be extreme pressure on him to make a deal. So they're just going tick tock, tick tock, tick tock. And the longer he waits and the closer it gets to the elections or the, when are they going to start? They'll start the primaries and everything soon. I mean, he's backing himself into a hole. The longer he waits, the closer it gets to election.
Okay, and one thing to consider too is you can play tough guy when the markets are at all-time highs, which they were last weekend. And you can play tough guy. The market came back nicely Friday. Maybe you can play a little bit tougher again, get a little bit tougher on the tweets here. But when the market starts to really significantly fall off, and if we get into a situation where we start dropping at 5, 7, 10%, I think there'll be talk. I think Trump will start to get a little bit, because he does not want the markets to fall. He likes to obviously brag, that, hey, markets are at all-time highs and that. So this upsets him when he sees, he knows he's caused this, and he sees the market going down. He does not want the markets to go down. He thinks the market should be rallying on this. He thinks this is good. The U.S. markets. He thinks this is good for the U.S. markets. They're not going to rally on this, but that's what he thinks should happen. So if, you get to a situation where this market really starts to go down significantly, I think he'll be more pressured for a deal too. So just as much as the Fed defended the market in December, I believe Trump will defend this market if the market really starts to slide, where we start to get looking like it could be a potential December. But we're a long ways away from that right now. I mean, we're still sitting up here, up, whatever we are for the year, 25% or whatever it is. We're up significantly still. So he still has a lot of bullets in the chamber. He can still play tough guy for a while here. So you could be in for a little bit of short-term pain. And that's why this market is pricing this in right now. And obviously concerned that there's not a deal to be had.
But what about, so you guys had a little bit of a spirited debate on the pre-market show, sort of about technicals and fundamentals and how they relate to this market. And I was hoping you can maybe go into that a little bit, because it seemed like at first you disagreed, but then you sort of came to a unifying opinion. But Joel, your point was that the only way to trade this market is with technicals, and Dennis's point was the exact opposite of that.
Okay, and what the agreement that we came to is that when I'm looking, I'm not going to I'm not going to look at the chart on Friday and say, whoo, wow, what a great close. Technically, we're breaking out. We're going back to all-time highs. Whereas when the market's giving me the information this morning, I have a place where I want to initiate a short when other news comes out, or where I'd be, likely to try, a long, or a place I'd want to cover a short if in the event that it blows through those areas, it blows through those areas. But look, and what I do agree with Dennis on is just like looking at a chart right now, it says, okay, no matter what happens, no tweets or, whatever happens, I'm buying ABC at 10 and I'm stopping out at 970. No, that's not what I'm looking at. What I'm looking at is using the technicals within my trading pattern to make decisions when the news comes out.
Or to get out of a trade. Like maybe you're in a trade and you're short something today and it's going to come to a level where you're more comfortable with it. But I've got to start trading here. I'm just getting head on everything long because I was making markets as I'm trying to trade, and that doesn't seem to work as I'm trying to do the radio show. But my point being, and I'm trying to remember what I was doing, so apology, was when you're getting hit on 3, 4, 5 stocks.
Your point was that there's
I think you can use the technicals to get out of a trade. It's difficult to use just technicals just to initiate a trade right now, because you don't know what the next tweet is going to be. You don't know what the next move is going to be. I mean, imagine you were just trading something just technically 5 minutes ago. Now China came out, we just dropped 10 handles on it. So you're so dependent on headlines right now, headline-driven market, that it's difficult to use technicals to enter a trade. I'm like, just a beautiful technical setup, I'm going to buy this stock. Unless you're pairing it up, maybe, there's different ways. And obviously the stocks that have relative strength, and obviously the stocks that have relative weakness. And you always want to be short the ones that have relative weakness and long the ones that have relative strength. You can look at that. But right now, this market is just kind of, at least this morning, is in sell everything mode. There's not even a lot of stocks. Like, we're scrambling to find stocks that are trading higher here this morning, and that's typical. And in a market environment like this, you usually see everything start to get hit. We're seeing it significantly here this morning. I mean, gold is not even up. I mean, this, for gold bugs too, Joel, we don't talk about gold much on the show. What are your thoughts here? You have a full-on trade war coming here, it sounds like, and market's down 500 points or 50, S&P handles here this morning, and gold is sitting here flat. Would you not think gold would rally on a day like this? Is it not supposed to be defensive?
If it's not rallying on something like this,
what's it going to rally on?
Never going to rally. No, it's not. It's not. And, I was being a little bit facetious when I said, the new flight to quality, Bitcoin, maybe, maybe it's a little bit more than my sarcasm on this, because gold, right. If gold's not moving on this, I mean, if this was a full crisis back in the old days, boom, 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 gold be up 20, 30, 40, 50 bucks.
Yeah.
So I agree. I've been out of gold for a long time.
I've hated gold for a long time too. We know that. I just think if you can't be rallying in this, environment or a day like this, maybe it's a slow, maybe it's going to lag, maybe we're going to be up here on gold. So I guess we should give it the benefit of the doubt, but come on. I mean, it's supposed to be defensive. If you've got this as, like Kramer says, portfolio insurance in your portfolio, insurance isn't working very well today. It's not down, but it should be rallying and helping on a day like this, and it's not. So,
well, I guess for whatever it's worth, it seems to be uncorrelated, which I guess is good. Not, maybe it's not.
It's always been uncorrelated. But
right, I know. So I'm saying.
Well, actually, that's not true. It usually has a negative correlation too. So, I mean, JC Peretz has argued it's been uncorrelated, and I think in certain environments it's not correlated at all. So I can agree with that.
It's like the one we're in right now, like this one.
But in a market environment that gets nervous, you do usually see a flight to quality in gold, and you're not seeing that here really this morning here at all. You've seen it. Maybe you could argue though you have seen a little gold rally in the last week. So maybe you could argue it's still there, just maybe not there this morning, and maybe the markets are slow, and maybe gold's going to pick it up here a little bit. But I just think you got a lot of nervous Nellies just selling everything here this morning, and some are maybe selling their gold too. And maybe you got a few people trying to hedge and trying to buy gold as a defense, and that's why it's not going up, because obviously you got sellers and buyers coming at equilibrium here at the price where it's flat. So I don't know. If I was long gold, I'd be very concerned that's not rallying today, though.
S&Ps, we just continue to create.
Yeah, we do. We continue to go lower here.
Oh boy. This, as I said, technicals here. Friday's low, the weekly low, 28.26. We'll probably be there in about 3 or 4 minutes, but we'll see if we get any kind of bounce off that level. Below that, I don't know, maybe put your sights on 2,800, but then we'll see what happens at
Ugly.
Low, weekly low. This is just unabashed selling here in the market.
Yeah, they're selling across the board.
Yep, selling across the board. So
we do have a merger here, just announced right at 8 o'clock. Top Canadian merger, WestJet. You have that in this headline there, Spencer?
I did have that. I didn't realize they're not publicly traded.
WestJet is WJA, Toronto Stock Exchange.
Okay, well, they were acquired by Onyx for $31 Canadian dollars a share. In cash. I don't know what the symbols are. They're Canadians.
WJA and on Toronto Stock Exchange. It's a widely traded stock in Toronto. So like volume, it's 221,000 on Friday. So it's not widely traded, but it's traded. Closed at $18.52, going off board $31.
What? Who's the company buying it?
Onyx. I think they're private. Oh no, Onyx trades on Canada too. ONEX.
What are they?
Interesting. So we got a merger, airline merger, scooping them up.
Wow, okay.
That's big premium.
Well, yeah, WestJet's like a small regional airline, right? Yeah, they're primarily Canadian airline.
$5 billion merger though, nothing that small. So they're fairly. That's a large Canadian carrier.
WJAFF is your OTC symbol for your
WJA. So anyways, $31, big move. So you have something going up, or it's halted right now in Canada. So something that's going to go up. We're scrambling to find things that are up. So oil's up. Callahan's saying oil is up. Oil's catching a bit here this morning.
Let's just do a quick technical on oil until OPEC comes out and says something. Let's see here. We just cleared that area. We had 4 out of 5 highs, right? It's a 62.49 being the highest of that level. We did clear that, now up $1.23 at 62.89. Let's see what happens at 62.95. That's your May 6th high. Call it 93 current, or call it 63 current high, 62.93.
Wow, I'm just looking, and this is just some carnage here this morning.
Yeah, look at Apple down $7.
Yeah, this is carnage. This is worse than the last Monday right now, at least from what I'm looking at. Just looking here at my screen and all the red. The pre-market almost looks like it should be down more than the market currently is. Not to really scare the hell out of everybody here, but we got some stocks down big time.
There is, from what I can tell, only one real mover off of a non-trade related headline, and that is Teva, which is moving off of a lawsuit. 44 U.S. states filed suit against Teva, accusing them of a wide-ranging drug price fixing scheme.
Holy cow.
And so that is your reason for Teva's move down this morning.
When dogs, this has been a dog for so long, and this dog is now obviously getting some bad news on top of it too, down another 9%. Warren Buffett is not liking whoever put him in this stock, because you said it wasn't Warren's pick, Joel. I don't know who was that pick, but this guy might be looking for a new job. Wow. Teva down another 9%. All generic drug makers I do notice are getting hit. Mylan Labs, MYL is another one's getting hit here this morning. So it is ugly in morning here for Teva.
And we've heard, I mean, this is kind of like regurgitated news. I know this is specific, but every once in a while, something comes out on these companies about drug pricing. Teva is trading down at 13.12, down $1.24. Just kind of holding in here. I mean, it's not getting ready to leap and rally back to 14, but it has stabilized on the initial headline when that was out 4 a.m. You made a 13.03 low, and boy, your low of the move back in. Oh, well, I see a 14 low, but that was back in December 2017. In November of 2017, you had a low at 1085. But I bet you if you drill down in your dailies, you can find some levels ahead of that. But 1080, 11, call it $11 is the major support. Not sure it could fall another $2 on that news.
I'm looking at my screen. I got 200 stocks on my screen right now. The only one I got's green, and it's just a tick, and it's probably not even going to open green, is Southern. SO. I mean, that's absolutely incredible.
I got a couple. I got NIU is green. That might be it actually.
Yeah. So you do see some. Okay. So there's some ADRs. We got, Shell got an upgrade. So RDS. If I get away from the US, I do see a few stocks trading in the green that are non-US stocks. A couple of ADRs. I do see a couple of gold stocks. I see GDX is in the green. Your ETF. But of your big S&P companies here, you're scrambling to find any that are in the green. This is ugly. This is a market bashing here this morning. Anybody who bought that rally on Friday, that Friday afternoon rally, is absolutely bailing here right now, or getting killed if they're not bailing, because we rallied that whole thing, which was kind of ridiculous when you think about it. We were down 2% in the market, and we actually rallied the whole thing back in the afternoon, probably on hopes that there were going to be a deal. And those hopes are now gone, and the market is right back down to those lows. This is an important level, though, and you just talked about this, Joel. Technically, talking technicals and using technicals after the fact. We've had the headlines now. We've had, like, it looks like there's no deal imminent. I mean, this low from Friday is critical for this market to hold. So here's where your technicals come into play. Yep. That 282.30 on the SPY, that's got to hold. If it doesn't, trouble.
Yeah, easily see 2,800. We've already had a huge range, and just bringing in more news. I mean, Jazz makes a point. China owns a lot of our bonds, and all these countries own a lot of our debt. I mean, that is not a good thing.
That's always been the case, though.
Yeah.
I mean, this has been an argument from Peter Schiff forever. I mean, and Peter Schiff makes some awesome, fundamental like arguments here. And obviously he's been bearish for a long time and wrong. But you read his books. I mean, he's always argued, hey, China makes all the goods. They hold a third of the U.S. debt or whatever it is, so they got a ton of our money, and they make all of our goods. He's like, what do they need us for? I mean, that's always been his argument. But it's you've looked at where the best place to be over the last 10 years, and if you were investing in China and shorting the US, you'd be getting killed, because the US markets went straight up in 10 years, and China's gone up a little bit, but not nearly kept up without the US markets have worked. So I mean, it makes intuitive sense when you think about that eventually China's going to come to realize, hey, we don't need the US for all these, for all this stuff, and we have all their money. But I mean, we've got a bunch of IOUs from the US too. So that 30% is a bunch of IOUs that are written on paper. And can the US repay all that if I requested? Hell no. So I don't know how they stopped digging. I don't know how, you stop digging the hole when you're $20 trillion in debt. But, this is a problem that the market has ignored forever. So I don't know why it's going to start, paying attention to this problem here now. Exactly, Spinner. He says that argument sucks. It's been that argument for years. The market has not paid attention to that for 10 years. So you could say, oh, in the long term, it's going to make sense. I don't know what your long term is. 10 years, it hasn't worked. So I don't know. It's hard to play the market, being, Debbie Downer there and saying eventually everything's going to implode. I mean, even if you are playing the market and everything implodes, I mean, everybody is hell of a lot worse off. I mean, it's like these people who are saying, an asteroid's going to hit the Earth and everything's going to, I mean, well, you're all in the same boat at the end of that anyways, right? So, if you're playing it, you're saying, okay, I was right. Well, were you really right? Is it good to be right when the asteroid does hit the Earth? I mean, it's hard to always just be negative and play the negative side, because at the end of the result, if you're right, it's going to be a sad world for everyone.
My long term is the longest term. So
what's your long? Okay, give me your.
However long that is, that's my long term. Well,
but I mean, given these arguments for years, or the Peter Schiff argument where China's got all the money, they make all the goods. What do they need us for? I mean, that hasn't worked for that. That argument sounds really good. I read that and I was like, that makes a lot of sense.
Yeah.
But it's been 10 years since he originally, more than that, maybe 13 years since he originally gave that argument. It looked like he was going to be right during maybe the financial crisis, but I mean, the markets came back resiliently and we're at all-time highs again. So
one positive.
Yeah, go.
One positive about all this is we've had tremendous attendance here in Benzinga's pre-market prep show. I mean, people are coming out and grow. Both chats are.
Why the world's ending?
Yeah,
so people want to come in.
we get more viewers when the world is coming to an end.
Yeah, markets.
World is far from coming to an end, people. I've still got. If I had my bull hat on and my bear hat on, maybe I got a neutral hat on, but I ain't going full bearish here. Not when I think that Trump's got this market's back. And I think if we start to go down 7, 8, 10%, I think Trump tries to get a deal done in a hurry.
This is an interesting headline from Zero Hedge, or from the Global Times. Like, Zero Hedge is quoting, China is discussing the possibility of dumping U.S. treasuries. Well, that's interesting.
I wonder where they got that from. But Dennis, I think, just real quickly, I think we got to, like, that last lunch bet of making new all-time highs. I mean,
Joe's trying to get his lunches back. You're so far in debt in these lunches.
Reload up there, and
he just keeps digging holes here now. He can't get out. It's like I've got all the IOUs on paper here. I'm China to Joel's lunch bets.
We go up there and take an all-time high, probably like a penny, and then we come back down on that. You want to reload up there, and you're like, talking over me. You knew I was lit. You knew I wanted to make the bet. You just start talking about something else, and you wiggle out. So we're scratching that one. I think I only owe you 2 lunches now.
I can't pay that stuff. And there's 25 steak dinners. So
all right, let's talk. We've got enough. We've talked a lot here.
We're going to imbalances in 1 minute. These are going to be interesting.
We've never gone 30 minutes before we've covered what we covered.
We cover one stock.
This is stocks talk about. This is actually
there are some.
This is the lull.
I want to bring up Zoom here. ZM.
Quiet period's over.
The analyst quiet period is over, and this is perhaps not a great sign when how many ratings? 1, 2, 3. I think like 5 or 6 ratings this morning are out, and the majority of them are neutral. We've got 2 overweight initiations. JP Morgan and Piper are going overweight, but Morgan, KeyBank, JMP, and there might be one, and Stifel, I think, are all neutral on a stock on an IPO that they underwrote. So I don't know.
Yeah. Well, that's a concern. I mean, the stock has had a pretty good run here from a valuation perspective. I don't know if it makes any sense, but again, we're not trading, on valuation. I've never, really, from a fundamental investing standpoint, I like to use valuation. From a trading perspective, I don't care about valuation whatsoever. And I'll tell you, the stock is still exhibiting a hell of a lot of relative strength. I'd say from a technical basis, if you just want to look at technicals, above 73.25. Bulls are still in charge. There's no reason to still go and say, okay, this is the top and get bearish here until you start taking out that 73.25 low. And then maybe it starts to open up a bit. But your relative strength in Zoom has been good.
Yeah, look at that. I see the level you're looking at, 73.25. A low above that, it's 74. We haven't even hit that. In fact, we haven't even taken out yesterday's low, Friday's low at 74.7. So, I mean, yeah, it's down $3, but are options available in that one? Because
oh yeah, I think they're out there, aren't they now?
Should be.
I tell you,
there.
That beyond me. Don't trade options the first day that you can trade them.
Holy, did that thing get the rocks. I tried it. A&W has Beyond Meat Burger, and I went to A&W and tried it. It's okay. Everybody's saying, oh, this is just as good as a hamburger. It's not as good as a hamburger. So it was good. I was like, do I really know I'm eating a veggie burger? No, probably not. But it doesn't taste like a juicy hamburger. So that was my thoughts on it. Spencer, what did you think? Did you think it was as good as a hamburger? Or did you think, would you notice the difference?
Yeah, well, I ordered it knowing exactly what it was, and I honestly didn't notice that much difference. But I'm disappointed because you said you tried it. I thought that meant you tried the options. But no, you just tried.
No, I tried the burger.
You just tried the burger. I'm so disappointed.
I tried the burger. I've made a couple of trades in Beyond Meat, just day trades, short-term scalp.
Oh, okay.
So I have been nibbling and day trading it a bit, but it's wild. So then these are short-term trades. Like you're going in and you're thinking, maybe you're looking at something just quickly technically and playing it for a quick scalp. Nothing more than a scalp on BYND. I'm not swing trading this thing at all here. You have 6 days of data or 7 days of data here now. It's still wild. From a valuation perspective, it makes zero sense to me, but that doesn't matter. I'll trade anything. So, if it comes out and something, makes me think it's a bullish in the next 5 minutes, I'm going to buy a stock. So, but I'll tell you from a long-term perspective, I think this is not getting in my long-term portfolio. Not anytime soon.
Just going back real quick for Zoom. For Zoom, what do we have here for the technicals? We have your close on Friday. I would just look at that. That's going to be your actually two closes at 77. That was, oh no, I'm not looking at that one. I'm looking at close at 79.63. Yesterday, 74.77. So we'll use that as support. Hard to find resistance because the close was way up at 79.63. Someone asked about Uber here. And under pressure, 45 was the high. That's where it was supposed to open.
Isn't that funny how these numbers work?
Yeah.
That was the the 45 was the underwritten price, right?
Yep, that was the IPO price.
And you have so many people lining up looking to get their money back at that point in time. When it opens in the red and it opens down, there's just a ton of people that are obviously we're in the primary market saying, I'm going to lose money on this. Get me my money out. Throw it out at 45. So it's probably a bazillion orders at 45. I guess we can go look at the book. It kissed it. But if I go run up and look at 45 here right now, my book, JV Specs book for some reason is bigger. Maybe you can give me the number that's at Uber. It only shows me about 100 levels here, and there's more than that levels now. But I'd imagine there's just huge size of 45. And I think you're in trouble to see that anytime soon.
And you did dip under $40 pre-market low, 38.25. Pretty good volume trading this morning. So if you're looking to try a low off the pre-market low, that comes in at 38.25. If you're looking for resistance, I would say the low at 41.06. We're not there yet, but I'm sure the close at 41.57. And this, you could say that they had some benefits of, going after lift, but if you look at it, the market environment that they're in, there's certainly no advantage to IPOing in this kind of market. We'll see what happens in Uber. I don't, neither of these companies will be entering my long-term portfolio anytime soon.
I read that Uber's IPO was the worst IPO in history in terms of market cap lost from their IPO date from the IPO price to the the closing price on the opening day. But in any case, 8:34 here. Let's take a quick break and grab today's guest. It's been a long time since he's been on our show, the Reverend Emmanuel Lemelson. We'll be right back in a moment with the Reverend. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick, now joined by the Reverend Emmanuel Lemelson. It's been a while since he's joined us. Reverend, how's it going this morning?
Glory be to God. Everything's good. I'm up here in the beautiful mountains of Stowe, Vermont. Trees are blossoming and surrounded by the beauty of God's creation. Can't complain.
Yeah, okay. So here we are. We have Reverend on here who is a fundamental trader, right? Do you ever look at charts, Reverend? Do you ever look at a chart?
Oh, yeah, I think there's some that, I mean, not in the sense of reading charts. No. So, I mean, and of course, I wouldn't consider myself a trader or an investor, but, you know, I think it's okay to get a visual indication of certain financial metrics in a company, for example. Absolutely. You know, we have a white charts account and we like to track certain metrics that way, but I've never been able to understand what chart reading actually is in terms of making capital allocation decisions. The movement of a stock price in a given moment or over time, if there's a pattern there, I've never been able to see it,
Okay.
or something that's predictable.
Okay. All right. So here we are, you know, in a really a fundamental environment or macros or whatever you call it, you know, with what's going on, the China in the trade war.
Sure.
I mean, you have you have your stocks, in your portfolio, you bought them for specific reasons here. Do you just put on like the tunnel glasses and just say, hey, you know, all this stuff is eventually going to be resolved. We're going to get a deal. Or does all this, what's going on with the tweeting and China, does this change your investment decisions or your time horizon?
Well, I think, you know, Joe, sure, we have to be aware of macroeconomic issues and the potential trade war, or maybe worse, right? I mean, it could go beyond a trade war with China. We should all be thinking about it, but you've heard the saying, money never sleeps, right? So it's not that we stop allocating capital, but we have to make sure that where we're allocating, we have a really good firm grasp on what we own and what the economic prospects of that is. So I think if you know what you own, if you understand the economics of the business, you know, you really can't pull out of well-reasoned investment thesis. It's just because there's an imminent macroeconomic issue. And besides, nobody really knows for sure, right? So we don't really know what's going to happen with China. Trump has vacillated on that a bit, but I'm in the camp that think that he's doing the right thing, so to speak. So, you know, there's really two political camps out there. There's the globalists and the nationalists. And the globalists are really advocating this position of free trade internationally and whether or not that's good for the U.S. economic system. The nationalists, of course, are more interested in preserving our own economic interests. Now, anybody who's really done business with China in the last 20 years would know that their model, their economic model, is very, very different than the U.S. model. And, you know, probably one of those is going to emerge as the global system that prevails in the future. I hope it's our model, frankly. I think it's the better model, but there is such thing as appropriation of intellectual property. There is such thing as co-opting our technology. I think we have to be, as Americans, you know, in our political view, we have every right to protect that. So, you know, I would say if you're really, really worried about it going south, try to buy things that, you know, investment companies are always going to have demand for their products. You know, we've been looking at Kraft Heinz for a while. pretty sure people will be eating ketchup no matter what happens. Even in a nuclear war, people are going to be eating ketchup with their fries. So, you can find companies that have been around for a long time, have good sound economics, maybe going through some turmoil, buy them at a discount. Those kind of companies, you shouldn't really feel compelled to sell them if there's going to be some conflict with China.
So wait, so Reverend, is that how you're positioning your portfolio right now? Is you're going towards like the flight to safety products, the staples type things?
Well, we're buying where we think there's a little bit of crisis, right, with Kraft Heinz, and
yeah, a little bit.
So if you can buy the stock about what Buffett paid for it, and the economics are not that different. I mean, there is a decline in the case of Kraft Heinz. There is a fundamental shift away from a lot of the key products that they have sold, right? There's a fundamental shift away from dairy, for example. But people have this idea that everyone's going to be shopping at Whole Foods tomorrow, and I can tell you there's a very large swath of America and the world that is not going to be shopping at Whole Foods anytime soon. Kraft macaroni and cheese is going to be around for a very long time. And there's a lot of innovative new food products in the market, but getting a product that works over the long run and has real long-term earnings power is not that easy, actually. Cornflakes, for example, it's not that that's a Kraft Heinz product, but it's been around for a very, very long time. It's not that somebody couldn't invent a better cereal, but finding the formula that works is hard to do. And I think the product line of a Kraft Heinz will be around for a very long time. So, and then of course we're getting, a great dividend. So if you can still borrow capital, say less than 3%, Fed funds rate plus maybe 50 bips, and you can get a 5% dividend, you're also hedging your risk there if you can just sit tight. But we are investing in those areas. We're also investing a lot in the retail sector where there's still tremendous bargains. A lot of companies with clean balance sheets, above average dividends. Again, really still pretty beat up. We've talked about that in some of your previous shows, and we're still allocating capital pretty aggressively right now in that sector.
The only thing about the French fries being around forever, I mean, what if a company beyond French fries comes out or something, and you don't need ketchup? You had Beyond Meat, but beyond French fries, maybe some healthy sort of French fry that doesn't need ketchup. But anyways, I want to ask you about the CEO being out at Triple BY, Bed Bath and Beyond. I know that's a stock that you've been dabbling in. Is that a good thing? Is that a bad thing? What is your current position? What do you think of the CEO being out?
Yeah, so I just saw the news about 10 minutes ago, and I haven't had a chance to read all the details, but
okay.
A company the size of Bed Bath & Beyond, pretty large organization. I mean, there's going to be a lot of talented people in that management team. They're going through some difficulties. There's compression in the margins and so forth, but I don't think that's anything other than sort of the normal cycles in retail. God willing, there'll be a new CEO and he'll be talented, but that company has a really, really long history of throwing out gobs and gobs of free cash flow and growing revenues. If you just look at the financial reports over the last 30 years, the income statement, you say, is this really the end for Bed Bath & Beyond? I mean, you go to Bed Bath & Beyond, you can't even get a parking spot there. Probably it's a good thing. I mean, if the guy wasn't able to affect change in their retail model fast enough, maybe the next guy will be able to. Changes happen. CEOs do change. It happens all the time. Maybe this will be turning a page for the company. But in terms of the company itself, any company throwing off that much free cash flow, that much operating cash flow, we love it. I mean, we've been buying it aggressively. So we're still doing that. And a great dividend as well. And
we had a question here. Do you trade any big cap tech stocks? And I know you've had a position in Apple for a while, and that's had a nice run, a big drop, and getting hit here after earnings. Have you adjusted your long-term position or outlook for Apple?
Sure. Great question, Joel. So normally we don't buy that many tech companies, and we've bought some in the past. We had a big stake in Western Digital back in 2012. That worked out really well. We bought Apple. In 2013, it was around the split adjusted price, something around $60, $65 a share. And we were saying at that time something that wasn't really popular. We were just saying it's really a services business. Apple is one of the great companies of the world. This idea that the hardware sales are going to decline or somehow saturated, I've never understood that critique, because I don't know about you guys, but my iPhone, the battery is basically worthless after 2 years every time, and I can't replace it, at least not easily. So, people are always going to be upgrading their hardware. The company has It's incredible. I mean, the install base for their devices is unbelievable. And the ecosystem, people are totally locked into, and a brand people feel good about. We don't actually own Apple right now.
Okay.
So we sold it at an enormous return. It would have been an even bigger return had we kept it longer. We said as much in our 2017 annual report that we knew we were selling it at a time when it was probably going to continue to rise, and it did continue to rise. But we are watching it. I mean, if it were to have a big fall, we would be buying back. Now, when we initially bought it, Joel, that's before their initial bond offerings. There was really no debt. There were no buybacks yet. So it was really a pristine balance sheet situation and a massive misunderstanding in the financial media about the real prospects of the company. So a lot of that's changed now. Now that we've gone through all these years of buybacks in the market and rising interest rates, things are a little different than they were.
What about Geospace Tech Corp? Now it's had that nice rally last week. We hit a major resistance point here at 1589 2 days in a row, and now you're backing off. Mr. Market's not helping much, but since 2015, 2016, this stock has had a lot of false starts here on a rally. Have the fundamental conditions changed here? You think we could get back into the 16 handle, and perhaps, I know you have a much higher target on the company, but why is this rally different from all other rallies?
Yeah, well, nobody can accuse us of not being patient, right, Joel? So, we own a big stake in that company, and we've been hard on the management from time to time. We think the management is not the most dynamic in the world, but the underlying economics are pretty incredible, actually. So, if you're willing to take the time and read what the company's been saying, they've really had very consistent revenue growth, and they just hit a positive EPS figure on a GAAP basis. Now, we've always questioned the GAAP reporting, saying that we thought the write-downs were excessive, even though they were according to GAAP. But, you've got a company saying they have unrelenting demand for their products. And it's not just the company. You can look at their competitors. You can look at or their customers, companies like Dawson Geophysical, or even if you look at like Transocean, things that people are saying about the need for exploring deep ocean exploration and ocean bottom nodes, which this company specializes in. That's one of their major product lines. There's not enough product in the world to meet demand. I mean, the company is investing records amount in production. Why it's still trading around tangible book is a complete mystery to me. Now, we've talked a lot about, we think Petrobras is going to award this large PRM contract. I believe that will be before September. If that occurs, and we're right about our estimate of the size of that contract, I have a hard time envisioning how the stock doesn't reset the price, and probably very dramatically. So, you're talking about a small cap E&P. They're really volatile. We have the scar tissue to prove it on the volatility, our fund. But, volatility works both ways. And you look at what happened, like an Ion Geophysical in the not too recent past. Company went up something like 6 or 7 fold in a period of 6 months, I think. And you look at companies like SAE Exploration. I mean, you just see these massive increases in price when there's a catalyst event.
Need a catalyst. What about anything new in the portfolio, or anything that you're doing some research on that may be added to it?
Well, I'll just say for now, I don't want to disclose too much because we are making some really aggressive allocations right now. We're making a lot of allocations in the retail space. And we're getting really, we think, fantastic bargains on stable, well-run companies with no debt, paying large dividends. We've said for a long time, we really want to shift back. Once we get out of this terrible oil and gas industry, the oil and gas industry is terrible, but we think we'll make a killing on Geospace. But we want to be in consistent dividend payers because that just really adds to your ability to compound over the long run. But in the future, Joel, we'll share more about it retrospectively. But a lot of smaller names in the retail sector, and they're probably still living under the shadow of Amazon's going to put everyone out of business. But I just don't think for a second that's what's going to happen. I think you'll see diversity. I think you'll see a lot of these retailers working on their omni-channel business, doing it successfully, and maybe even finding ways to collaborate with the larger players like Amazon.
Okay, one final question, and Spencer might have one more for you. If I was there twisting your arm, and you had to take a position, right, a large position allocation, in one of these 4 stocks, which one would you choose?
Sure.
Uber, Lyft, Zoom, or Beyond Meat?
None of them. But if I had to, and if someone put a gun to my head, probably Uber, just because I know Uber. I use it. I have the app. Okay. It works really well. Brilliant business idea. But to tell you the truth, I've never bought an IPO, Joel. I probably never will. I don't really follow the financials. But Uber was the first to market, right? So as far as I know, extraordinarily well business. I happen to use it. I know something about it. It would be Uber if I was forced to invest.
All right.
But Joe, listen, next year we got to get you to our annual meeting. We just concluded our annual meeting up here in Stowe, Vermont. It was a tremendous success, super exciting. We'll get a video out there soon, hopefully, for you
Send
guys
it
to
to us.
review.
Sure.
But we'd love to get Benzinga up there because we love Benzinga. We love you. We know you're doing a great job, and we would like nothing more than have you here next year.
I'll come out there with Spencer. Little
Oh,
road
yeah.
trip. Little road
Great.
trip.
All right, Reverend Emmanuel Lemelson, thank you so much for the time this morning.
All righty, guys.
All right.
Great
Thank
talking
you.
to you. Take care.
All right. 8:49 now. Joel, any movement here? Or?
Well, I mean, I said 28.26. We got to 28.28. So there you go. You're holding some support above the low from last week. Based on the daily lows, your March 29th low was 28.20 1/4. So that's another 6-point drop. And then really no daily levels in there. You could think about 2,800. So we'll see. We'll see if we got Mr. Resnick here. Do you want to make any comment on it?
I don't know. Jason's just sort of hanging over Joel's head right now. Dennis, what are you up to right now?
Just looking, like we obviously got imbalances. Some of them are large, but again, they're not that big here. So on a day like this, when you see the market down 50 handles, you think everybody's thrown in the towel. I'm not seeing on the individual stocks, at least from imbalances, but they are trading down significantly. Probably a lot of orders going to come in that last 5 to 10 minutes as institutions don't want to show their hand on a day like this because they know liquidity is going to be lower and they know they can really push price, which they don't want to do if they're wanting to get in and out of a stock. But if I've just given you some highlights, the ones that stand out to me, actually, a couple pharmaceutical stocks, Merck 168,000 a sell and Pfizer 130,000 a sell. Those are big just because those are usually more defensive stocks and they're not playing defense here this morning. But again, this market has been, I'm looking here and there isn't much playing defense this morning. I mean, gold is trying to go up here, but for the most part, it's red across the board.
All right, we want to interrupt this trading show for a quick sports alert. Jason Resnick, what do you have for us?
The University of Michigan, very successful coach for the University of Michigan, John Beilein, is heading back to the NBA and signing a 5-year deal to become the coach of the Cleveland Cavaliers.
And you just ruined Joel's day, so thank you very much for that.
Yeah, I never seen him so upset when I told him. But yes, this will be likely announced somewhat later today. There's some rumors on Twitter, but we have confirmed through our sources.
Jason Resnick, breaking news in the sports world here.
Yes, Benzinga sources have
and now Joel is beside himself. I would have preferred if you'd have waited 10 minutes till the show was over, so he could at least function for the next 10 minutes. But I guess not. So all right, that was a sports alert brought to you by Jason Resnick, and Joel just got up from his desk.
Yeah, Beeline's very popular and highly liked guy. So see how it goes.
All right. Thanks a lot, Rez.
Want a Tesla update? What? You haven't heard of Tesla?
Yeah.
We want a Tesla update. Hell yeah.
Tesla right now.
I'm a buyer at these numbers.
Nice.
The car gets getting better and better. They sent a software upgrade about a week and a half ago. It made auto drive about 70 times better. I was able to drive from, we're located in Detroit, Michigan. I was able to drive from Detroit, Michigan off the 10 freeway with not touching the wheel. What I mean by that is not human intervention to move the car. My hands may be on the wheel, but the car did everything itself, meaning the car knew when I had to go off the expressway and it got me off the expressway. It slowed, it switched lanes. If the car was slow in front of you, it would say, we're going to move to a higher speed lane. It would do the passing all itself. It was a really good experience. It does have some difficulty when there's an overpass and you're going underneath it. It sometimes thinks something's going on. It sort of breaks, but then fixes itself. But it's quite the experience and a lot safer when someone, maybe is not shutting their eyes or checking their phone because the auto drive takes care of it all. I even had my mom in the car this weekend, which she's so against it, but I was able to pull it off for a little bit.
All right, so
you've got Jason. Do you think we're like, and Musk kind of acts like this, autonomous driving is right around the corner, and then you get other people that are saying we're 10 to 20 years away from there. You've obviously had an experience, with your Tesla here. Do you think we're as close as Musk, says we are?
So one of the things Musk does, he says grandiose terms and grandiose items. Now, Musk has now joined the autonomous software group to improve the software for this auto driving thing. I don't think that next year you're going to have 1 million Tesla taxis, but On the expressway, Dennis, I mean, it is really second to none. You're there. I mean, you're there. Like you are there. Was it 10 to 20 years? No, I don't think so. I said to my mom, I go, cause like right now, see, here's what happens, guys. Uber came out about 7 years ago, and I would get in an Uber when I go to New York, and my parents would be like, "That's crazy! You're getting in the back of some guy's car. Who knows what to do to you? All this stuff." I'm like, "Well, mom, they have referrals, they have feedback, all that stuff." It's the same kind of reaction of auto drive, and I get it. It's a car, and you can get in an accident. I get the whole thing, but it's the same kind of reaction. And I think in 3 years, people just wouldn't consider driving a car that doesn't have auto drive in it. It's just a much safer experience, and it's great backup. I mean, look how many car accidents there are a day, how many car fires. I mean, it's just a much safer experience.
I just think about the efficiency, because you think about how much efficiency you lose from driving from point A to point B. I'm going to take, an hour of my day. Yes, I can listen to the radio. And yes, I can do some things. But imagine just being able to like sit there and do, pull up your computer screen and for me, like trade as my car is driving. Imagine the efficiency. Like, could we get to that point eventually where I could actually just be in the car by myself? I could be trading stocks, and the car is taking me from point A to point B.
Dennis, I think that you can do that now on the expressway. They have a thing where you have to nug the wheel every like 30 seconds.
Yeah.
But some ways around that, but I think you can do that now on a Tesla on the expressway. It's really
I don't think, Dennis, I don't think you need that. I don't think.
And the only way for someone really to feel it, it's just like when we want people to, Detroit's in a huge renaissance, and we tell people, but they don't really know it, understand it, or feel it until we get them on this Detroit tour. So if anyone wants to come out, check out Detroit, we'll get you on a Detroit tour. You'll see what's going on here. This is going to be the next place where people are going to want to be. But you got to get there and feel it. So if you want to see how the auto drive and the Tesla thing works, you got to drive one for like 30 miles. You got to take it and really experience it. You have a Model 3 at $35,000, $40,000. You never have to get gas again. I just, someone buying that price car, I don't know how they don't consider the Model 3. But listen, I'm long it. Now the stock will probably get hurt some more. I mean,
everything's getting hurt here today, especially. Stock's down 3% because Trump, but
it's Trump, yeah. And Trump's ultimately looking to get a better long-term deal for the markets, a better long-term deal for us. There's going to be short-term things like this. And so can you I mean, Tesla's down $8 down. We're looking at 231.80 clip, so it's those are the numbers.
But you've got your long-term thesis, and you're not scared by any morning volatility or anything like that.
I mean, Spencer, there'll be some days where I get scared when I see Elon say there'll be 1 million Tesla taxis on the road, so they'll be making money in next year, Spencer. And I'm just like, come on, man. Like, there's no way that's happening. That stuff scares me. But if you look at Tesla, Spencer, and their product pipeline from the Model Y to the Semi to then the pickup, I think they have in the new Roadster, just going off that and doing nothing else at all, Spencer, I think they have one of the best auto pipelines in the market. So if they just focus on execution, everything should take care of itself. I don't think you need to talk about the 1 million taxis. Now, when the stock goes to 231, yeah, you do not like to see that. But I have to say, Spencer, I bought Tesla at $38 originally. It took a while, but it went up to 56, okay? And then went down to 43. And I was like, shoot, what should I do? Or 44. And I just sat there and didn't do anything. And now it's at 233. It's a real long-term.
Not to go straight up.
So yeah, it's a real long-term play for me, guys. And I guess in a year, 2 years, we'll see where we're at in this. A lot of things can come into play.
All right.
That's my take.
Jason Raznick is the CEO of Benzinga. Thanks a lot, Jason.
Thanks, Spencer. Thanks for letting me come on.
Yeah, sure.
Bye-bye.
All right, Dennis, we got like 2 minutes or a minute or so left on today's show. Any of the kind of final thoughts on this market today?
Obviously, volatility is still going to be escalated, but right now we're seeing a sell everything market. We know it just depends on one more tweet. So you're coming in here and saying, I'm going to short everything now. You're kind of late to the party. So let's see what we do. We've got a big level here on the S&P that we're challenging here in the pre-market. Joel can probably talk about that. I mean, 282.30 was Friday's low. We got down there and almost kissed it there just about a half an hour ago. So that level's big. Can we hold that? Do we, try to find some buyers there, or do we just flush right through it and go down to 2,800 S&P? I mean, volatility is going to be escalated. You got to be careful when you're trading these markets, but also if you have your shopping list, stocks you want to own, maybe it's Tesla you want to own. I mean, you talk about Tesla, it's coming into a huge level. I mean, you look at this 230 to 231. This is where we bought them 2 times before. Maybe this is a stock. This is sometimes a stock that can move counter to the market too. Not always, but in some cases, maybe this gives you a shot if you want to be in a stock like that. I'm not saying you do, or if you don't. I know I've never been able to stomach the stock, but it's got a big level coming in, a big support level. So, there is setups here, even, in a market that's down this much.
All right, I'm back. I'm back.
Are you okay?
Yeah.
Okay.
Yeah. There's, you know what? You guys don't care about sports, but I do, and it's just he's sick of the turnover.
Yeah.
He loses all these players. So if you can't control these kids coming and going a lot, then go to the NBA. He's a great, he can build his own team and see what he can do. He's a great coach. So hey,
All right.
I'm a Cleveland Cavaliers fan.
All right. Final thoughts here on this market.
Final
Joel.
thoughts on the market. I'm still going to look at Friday's low, 28.26. I'm not going to get real panic if we do take that out. There's some other daily levels in here. 28.20 and a quarter was another low, but still going to just wait for that low right around 9:29 and 59 seconds to see what that low is. I think there'll be some kind of recovery. I don't think it's just going to be like a straight down all day, one day occasion, just because you look at all the people that, okay, I got caught short on the close. I'll just hold it over the weekend, and then boom, you have this. So we'll see what happens at 29.26. And on a rebound now, I'm going to have to move my resistance area, my potential short area, all the way down from the pre-market high down to 28.4350. So what a different show today. But anyways, hope we've helped you guys with your setups. And as always, we'll be back tomorrow.
Yeah, well,
and I just want to tell you, I did talk with Gene Munster last week. He's coming on the show next week. I teased him about Tesla, and he's sticking with it. So we'll drill him with some questions
Then
next
on
week.
that note, that'll be it for today's show. If you missed any part of it, catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Podcasts, or just rewatch the show on YouTube. Thanks to our guest, Reverend Emmanuel Lemelson. If you want to hang out with Joel, Dennis, and myself at the Benzinga Trading Summit, you can do so. It's June 20th in New York City. Tickets are available bzprofit.com. Enter the promo code PMP15 to get 15% off any ticket, including tickets to the exclusive Traders Lounge that Joel and Dennis will be moderating. So again, bzprofit.com, promo code PMP15. That's it for today's show. Everyone have a good rest of your day, and we will see you and talk to you on Tuesday.